Hey everyone, my name is Dearonne Bethea. I'm the CEO of Bands & Brothers Investment Group. And today, guess what? We're going to be talking about, a lot of people like to talk about making money, but a lot of people don't talk about all the things that goes through. I'm going to be talking about how I was able to lose $500,000, which was probably one of the best $500,000 I lost, because all losses, some of them are lessons. It was the best lessons ever. How I was been able to turn it around and build a $200 million of assets up under management.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owners Association, where real estate investors have found success since 1968. I'm your host, Brian Hamrick from Hamrick Investment Group. This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 547. Most investors talk about their wins. Very few go back to the moment everything fell apart and explain what they got wrong. My guest today is Dearonne Bethea, CEO of Band of Brothers Investment Group and a retired U.S. Army Chief Warrant Officer. Dearonne took a $500,000 loss early in his career that forced him to rebuild his entire approach to deals and risk. Today, he controls more than $200 million in assets across multifamily, rental housing, and private investments. Let's find out how he turned it around. Dearonne, thanks for being on the show today.
Appreciate you. Thank you for having me.
Tell us a little bit about yourself. You were just telling me before the show that you've got 3 homes and 3 really cool places. I think Dallas, Hawaii, and then Dubai.
Yes, absolutely. Yeah. So like you said, a little bit about my bio. Yeah, I joined the United States Army. And, I was actually born in a small town called Enfield, North Carolina, which is, if you look at it, it's the poorest town in the state of North Carolina. When I left home, I think the household income was about $16,000. Today is somewhere, maybe like 22,000. So not a lot of change. But when you come from, I would say, when you come from areas like that, you have limited resources. And, with limited resources, you tend to be around the same bad crowds. I got the opportunity. Unfortunately, a good thing, I got the opportunity to join the Army, not because I wanted to join, but it was either that or maybe, hey, you go to jail or whatever the case may be. And so I ended up, got a second chance at life, joined the United States Army. I got a mentor. I never rode a plane. And what I realized that was I was able to get out of my comfort zone. I was comfortable from, being from where I was at. That's all I knew, right? So, joining the United States Army, I went, my first duty station was South Korea. That's when I met my first mentor. I was 20 years. A lot of people, to get to $200 million, being on active duty, doing 20 years, building businesses while I was on active duty, deployed to Iraq twice, Afghanistan, and still able to put all this together. And there's one word that if anyone were to ask me how, and the only word that ever come to my mind is discipline. Being able to be disciplined, extreme ownership of what you want. And my life changed. And fast forward, and I've been able to build a phenomenal business for sure.
It's one thing to come from the poorest town in North Carolina and go into the military, but and by the way, thanks for your service to our country. I mean, being in Iraq and Afghanistan. But at the same time, I think what I want to get into is you talk about the discipline of building businesses while you were employed by the military. I mean, what does that look like? Because I don't think that's a traditional path for most military.
You are absolutely right. When I was in Afghanistan, Iraq and both Afghanistan, I kind of like my career path in the military. I was successful. I was a drill sergeant. I went from E1 to E7, switched over to retired Chief Warrant Officer Four. That's like 11 promotions I did. Got promoted 11 times in 20 years. So I really did great. But I could have easily, what most people do traditionally, they will get out and retire and go get a GS job or a government contracting job and make phenomenal. I'm talking about they'll be within top, 1 or 2% of all US when you got retirement and all this, good paying jobs. But what was different from me, I had lost, people that I knew, good friends. And I said, you know what? I witnessed someone leave the military, deploy to Iraq, and within 6 months wasn't able to go back to their kids. And that right there was the light for me and say, you know what? I want to control my destiny. I want to do something and build something and control my time, putting on combat boots, going wherever, Uncle Sam tell you to go. I realized like that's what I wanted to do. So I became an entrepreneur. And just give you some context. When I was in deployed, I learned and self-taught myself how to trade stocks around age 20. I started buying real estate at age 20. I bought a tax lien property. It was my first doors or mini doors that I own now. And I still own that first one. It was a tax lien. I put down, I think it was $13,000. And I called the bank and the bank was said, try to get a loan. And I was denied. And because I didn't have established credit for $13,000. And I went to my mentor, who was a command sergeant major in the United States Army, who allowed me, the same guy that was going to kick me out of the Army after being there for 6 months because I couldn't get my stuff together, was the guy who made me his driver. And I drove him around all the way through Afghanistan for like 5 years, from career to Fort Hood, Texas to Iraq twice. And he gave me an opportunity where he taught me how to invest, just a traditional investing in Roth IRAs. But I came infatuated how money makes money. And what I mean by that is, at age 20 years old, my first account was a thrift savings plan, similar to like an IRA or 401k. For most people probably listening to it. But I put $250 in there, $50 a month. And I remember waking up, that account moving $4 here, $3 there, $5 there. And the way that made me feel was like, wow, you know what I mean? Like, it went up, and I came in and I picked up every single book and magazine that I could find to talk about investing. And I came really, really good. Trading stocks. I came phenomenal at trading options. By the age of 28 years old, 27 years old, I was already a millionaire just from buying real estate. Was able to get this loan from the bank because I went back to the sergeant major and said, "What you going to do?" I said, "You just going to give up?" I'm like, "No." He said, "You need to call and find another lender." And I didn't call another lender. I called the same exact lender, and which was USAA. And she asked me for my Social Security number. I gave him Social Security number. I'll never forget. They came back to the call and said, "Yes, sir. I see that you called and you were denied." And I was going to immediately hang up the phone. And I asked one question. I never forget. I said, "Ma'am, if there's anything else, I'm just need $13,000. And she asked me a question, just talking about limited resources. Our education was the best. She said, "Do you have collateral?" And I said, "What's collateral?" I didn't know what collateral was. She said, "Oh, do you own any other properties? Do you own maybe a vehicle?" "Oh, yeah, I got a vehicle." My grandma had just passed right before me leaving to go to Afghanistan. And I was able to use that vehicle. I said, "You know what? I got this Cadillac, that my grandmother left me. And how many years? How much the mileage?" It was all these things. And I gave it to him. Before I got the phone, I had the money in the account. And that's how I got started in real estate. And then I got into businesses actually by reading all those books that I read for those years, those 8 years, just reading, just tightening up my shot group, maxing out IRAs, maxing out TSPs, maxing out, just living off me, my wife, 5 kids, 4 girls and a boy, living off one paycheck, dual military. And I would just saving one paycheck, investing the entire paycheck. And then I say, okay, I hit this. What's next? And I remember a lot of things talked about in those books that, the really wealthy people have equity. And I said, okay, what's this equity thing? And you need to have some type of ownership. You need to build businesses and startups or whatever the case may be. And that's how I started. And I got into building franchises on active duty. I was building about 2 Anytime Fitnesses. Started out in Dallas, Texas, and I went out to Fort Bragg. Never lived in Fort Bragg, but in Fort Bragg, there's a huge military presence, and I built all the ones out there. And every year I was building about 2 per year. Is how I kind of got started.
So how were you able to do this? Like buy a tax lien property and build out Anytime Fitness franchises while you're deployed by the military. I mean, you can't be boots on the ground. So how were you able to do that remotely?
Number one, in the military, and not just in the military, I think everyone have the same exact amount of time per day. And it's 24 hours. My days start really, really early. Be up out in the gym by 5 a.m. And then before, I'll be driving to physical training. We call it PT in the military. I'll be on meetings within, taking me an hour to drive to get through the gate, get through formation, do my PT, go to work. Then I have a lunch window, which is 90 minutes from 11:30 to 1 o'clock on work. And everybody knew me as, hey, D, he's the business guy, he's working. And then when I get home, 5 o'clock, eat dinner with the kids, I'm going to bed 12 o'clock. And I did that for 13 years. While I was working anywhere from easily 18 hours, 20-hour days. But I was conditioned for it because I was a drill sergeant. And then that was the same amount of hours that you work as a drill sergeant. But as far as being able to do it and hire people, do all that, you have to have a team. And what I did was I said, I want to create an investment group because I was reading these books and learned about family office and, private equity and how they are structured and all that. But what I really did was, and I tell everybody this, my military career was, I worked strategic, meaning that, and I was a senior officer. I worked for some really, really smart generals. General Milley reported directly to him, worked for him, did all his reports, like some really small, cool officers that I have worked for over the years. And being at those levels, you can see how these combatants, commanders, all right, are fighting wars all around the world. All right. And they located in one safe position, whether it's at Fort Bragg, at the Pentagon, or they may be in Kuwait fighting wars in Iraq, or whatever the case may be. And I sat back and I was always a fly on the wall. I was always in those strategic meetings, and I took the PowerPoint presentation that I was just prepared to brief my general, and I created my Bands and Brothers one. And we put down KPIs. Just like they have generals, I had COOs or general managers at the time when I had my company. I got over 200 people right now on payroll. But back then, it was just me and two other friends.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB & Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. You work hard and you build businesses. There's always setbacks. And I'd love it if you could share the one I mentioned in the introduction about the $500,000 setback.
That was my first fitness. That was the first one, the first location, Dallas, Texas, in Richardson, City Hall, Richardson. I didn't know. I was 20, maybe 27 years old when I purchased that franchise. My biggest challenge, and I tell people, the biggest thing was location, location, location. When you look at the area, when you're looking at all the market analysis, things that I know now, I built so many businesses that I didn't know now that I did, was that I was looking at some of the stuff when they're broker, they'll say, hey, population growth, income growth, all great. Everything was good. But what was wrong was that where I was positioned in the center. So I'm in the shopping center. Directly in front of me, I'm on the end cap, meaning I'm at the end tail of the center. there's a building directly right in front of me. Like you get no zero visibility. That was number one. Mistake number one. Mistake number two was that when I was getting all the analytical data, I didn't look at who actually lived within that 1 or 2 miles. It was all baby boomers. Which they wasn't coming to the gym. And then when they did come to the gym, their gym membership was $7, $8. Called silver sneakers is what they call it. And that I didn't have $8 on my performer. I thought I was going to get $39 for every member. So that was mistake number two. And mistake number three is my partnership. 70% of partnerships fail. All right. My partner, who also I started with in Afghanistan, just say that he literally just kind of like, looked at it as a loss. Like he was okay, but I kind of found out that his family and was tied to a lot of money, a lot of oil money. So it was an easier paper loss, but we was burning cash about around $8,000, sometimes $10,000 per month was burning cash. We blew through hundreds of thousands of dollars within like the first 18 months. Like it was probably like $200,000. And we lost about $500,000. I still own that same business to the day, which I turned it completely around. It was one of the scariest, most time. I had anxiety. I thought that, I'm definitely going to stay in the military 30 years. I'm definitely going to go get a GS job. I'm definitely going to go government contractor job. And that was the first thing that I was thinking is that I got to pay this 10-year loan off, and I got personal guarantees that I got to pay the landlords. And I kind of went into a shell. And then, I said, if I got to figure out. So what I did was I wrote down everything I did wrong. I wrote down everything I told you. Did this. So I can't change my location. All right. I can get out my partnership if he's willing. But as far as the market itself, it naturally changed over the years. Dallas started booming, State Farm, all these jobs started coming, young professionals, I'm saying younger people moving to the neighborhood. But what I was able to do was I was able to create my own workout plan. And I was able to go something I didn't know what to do. And I didn't learn this till like 4 years, 5 years later after having a business. And I doubled down on myself after I figured out what I did right or wrong and was able to negotiate, get my terms, get some interest on, defer my payments. And I was able to lower my rent. And I paid the lowest rent in the center, which knocked down my expenses all the way down to a break-even point. And I negotiated, that was years ago. I was able to negotiate those deals and those terms. And I lost $500,000. But what I also did was when I was losing money, I was still losing money. And I took everything. Remember, I had $1 million. I took all my money. I betted on myself and I opened up another location. All right. And that location was in Fayetteville, Fort Bragg, North Carolina. And I called my guys up. All right. Different partnerships. These are the guys that still my partners today. The guy that was my partner was a Chinook pilot guy that I was in Afghanistan with. But my true partners that I'm partners with right now, who I told them, I said, I'm going to bring you into business when it's time comes. And I thought that time was going to come 20 years when we retired. But what happened was I said, I'm going to put the money up. All right. And they each gave me $20,000. That's it. And I put all the other money up and I gave them 20% of the company. And we opened up the first location. And when we opened up, we was making money. Within 6 months, we was crushing it. 12 months, it was a cash cow. And we opened up another one. And we able to sell both those locations for $2.6 million. And I was able to, that was like, and then I was like, okay, I got the formula. And I just kept on repeating all the way to now. I got gyms in North Carolina, Texas, South Carolina, Arkansas, the Hawaiian Islands, Honolulu, Waikiki, Kauai, Kapaha. I'm all over there. So
are those all Anytime Fitnesses or other franchises?
So all Anytime Fitnesses, which, I'm building my last one right now as we speak. I would not build no more of those because I started my own franchise. I went from franchise as a franchisee, now I'm a franchisor. In fact, before getting on the call, I just got my trademarks after 2 years, just got approved for it. But it's called Treazure with a ZTREAZURE, Treazure Studios, which is a salon suite model where it's a real estate play where we're taking these 5,000, 6,000 square foot space, and we carving them out, and we making high-end luxury studios for estheticians, barbers, stylists, med spa, and not only, and we charge them a weekly rent, and they lock in for like 12 months to 2 years. And the most important part is it gives me an opportunity to educate people, because our inside minds, and we the only one in this space that does this, where that we teach lifestyle professionals, not just how to become smart in their business, but I have a whole program called Treazure University, where we teach and educate them, being able to make sure they are successful, creating 401ks, solo 401ks, health insurance, helping with trust and all those things. So we're giving all those to them too as well. And it go hand in hand with this position, this franchise that I created, where I'm in Dallas right now. We're building out some locations, but it goes hand in hand with all my multifamily. Like all my multifamily, we manage all our properties. You know, we got tenants. I'm in one of my luxury properties I got today. And we just, that's kind of like what we do.
You've mentioned doing stock trading, options trading, real estate. You bought your first tax lien, franchising with the fitness, and now your 5,000 square foot Treazure
Studios.
Yeah, exactly. So where do you put real estate investing in this list of what has worked for you and what has made money for you? Because you've done a lot of different things, and I just love to know where real estate kind of sits.
I was on a plane coming from Dubai, and it was one of those days I was sitting looking out the window. I said, I got a lot of stuff going on, and I got 7 different pillars. Got a great team to support us. When I say 7 pillars, I got 7 core businesses. Anytime Fitness is just one. Treazure Studios, one. Multifamily, 2 property management companies, a brokerage company. And I wrote everything down, pros, cons. I said, what makes me the most money? And I put them in buckets. And I said, okay, cool. Now, what makes me the most money with the least amount of time? All right. And when I looked at everything, it said that, hey, the businesses makes the more cash flow. The vacation rooms make the more cash flow. But you make the wealth is the money is being made when we exit and sell large apartment complexes. So I already knew that. And if you look at anything about me, my brand, my brand is Dearonne Bethea, Road to 100 Streams of Income. And what I believe is, without a doubt, the fastest way to create wealth, right, is to open and operate businesses that create strong cash flow. And you take the cash flow and invest it into real estate, commercial real estate, or luxury, nice, high-end vacation rental properties. The reason that you need both, it accommodates each other. I never paid a penny to the IRS. Never had to. I make millions of dollars. And what we're doing is we are buying large real estate assets where we are able to take tons of depreciation by me being a real estate professional. So by me being a real estate professional, for every dollar that I make, I can do a cost segregation study, which is a lot of real estate when you buy $20, $30 million of properties. I get tons of write-offs and carry forwards, and it just offset each other. So I believe you need both. I am pivoting where that I will no longer build Anytime Fitness, because if you ask anybody about, hey, what is the headache? When I was up there, what is the headache? People. So I built the model, say, listen, I still need the cash flow. I like the cash flow that the gyms make. I like it what it brings in. How can I create a business model with less employees and more entrepreneurs? And that's why I created Treazure Studios. Everybody got their own LLC. There's zero. There's no employees there, but it's a great cash flowing business that is semi-active.
Why 5,000 square foot? Because I've seen that model done in 2,000 square foot. Did you arrive at 5,000 square foot for a reason?
So what I have seen was I have a good mentor of mine. He's the only person I talk to every day through text message. And he's the largest owner of the salon suites in the U.S. outside of like a private equity. Like this is a franchisee guy, built 180 locations. And he got greedy, right? When the space came out, everybody was getting get into it. He started building 20, 30,000 square foot, hundreds of salon suites. He was making money, just making money. But one of the things that he told me when I was getting into space was, he said, if I could change anything, it would have been the size. And I said, and for me, I said, I was thinking, 5,000 to 6,000 would give me about 25, 30. I can get some good TI for that. And then my break even will be much, much lower. All right. The bigger the space in retail, the cheaper your rent. When you start getting 1,500 square foot to 2,000 square foot, your cost per square foot is going to be much, much more than someone that's taking 5,000, 6,000 square foot. Someone taking 30,000 is going to be much, much smaller than someone taking 6,000. So that was like the sweet spot. I did a lot of homework. At this point, I'm really smart. I'm talking almost 15 years been in the business of just being a businessman. So I did all the work. I used someone that was successful, got his feedback, and it's easy to break even. It's a nice number to be at, so that if someone were to come in and open up a salon, and you got all these studios, 50 studios, it just puts you in a much, much better position. So I think 25 to 33 max studios is where you want to be at. I think 15 is too small of a number. Think of it like multifamily, right? At the same time, the same energy it takes to manage a 50 unit, it's the same time the energy it takes to manage 100 units. If I got 5 empty apartments in a 50 unit, I'm probably like 80-some% occupancy. If I got 5 and 100, I'm 95%.
Tell our listeners and our viewers how they can find out more about you or get a hold of you.
Real easy. My name is, just go to my website. We send everybody there. You can find tons of information on me. But so that's DearonneBethea.com, social media as well.
How are you using AI in your business?
I just got back. My partner's in the other room in my family house. He's actually doing a podcast too. And I came to Texas, to Houston. I was in Houston. I'm in Dallas. I was in Houston. I was in Houston at we spent a lot of money for this mastermind that we in for the next 12 months. A lot of my 6 figures for me and him. But we went in, we do in-person workshops sometimes. So we came down for an in-person workshop. And what we're doing is we are creating non-negotiables within our organization that everybody will roll out. So I hired 2 AI integrators that will report directly to me and my partner Vince, where that their solely focus is to integrate across the board. And what we're doing is we're using Claude CodeSpace, we're using Perplexity as well. And right now I have a team of really, really smart people that I brought on. These are tech guys that is building a massive dashboard for people that have enterprises of our caliber or our level. So that's what we're doing. We're making it mandatory. We are from the back office team to the operators, but we're not just going to say do it. We're going to give them training too as well.
Dearonne, it's been a real pleasure talking with you, and thanks for sharing how you got started, your military career while you were active in the military and building these businesses at the same time. And I really appreciate you sharing the trials you went through on your first all fitness franchise, the $500,000 burn, but you've turned it around, and I really appreciate you sharing all this with our audience today. Thank you so much.
Thank you. You have a great day too.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's higinvestor.com. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.